Have you ever wondered why housing prices in major cities are skyrocketing? The answer lies in the imbalance of the global housing market. Cities like Frankfurt, Zurich, Munich, Hong Kong, Vancouver, and Amsterdam are showing pronounced bubble characteristics. This means that their housing markets are highly inflated, with prices out of sync with the real value of properties. Elevated risks are also being observed in Tel Aviv and Tokyo. These cities have joined the group of cities in the bubble risk zone for the first time since the UBS Global Real Estate Bubble Index was first published in 2015. In the United States, cities like Miami, Los Angeles, San Francisco, Boston, and New York are all in overvalued territory. High imbalances also persist in Stockholm, Paris, and Sydney, while risk valuations have remained unchanged in Geneva and London. In the face of rising interest rates, these imbalances have become more pronounced, leading to a global real estate bubble. Let's delve into the specifics, starting with Frankfurt. The city has seen an intriguing shift in its housing market lately. Nominal property prices have increased by only 5% between mid-2021 and mid-2022. This is a stark contrast to the double-digit price gains that Frankfurt had become accustomed to, and is just half the average growth rate of the past 5 years. Interestingly, this recent cooling masks a stunning rise. Frankfurt's nominal housing prices are more than 60% above what they were 5 years ago. Price growth has significantly outpaced income and rental growth, leading to a major decoupling from fundamentals. Investment demand has been instrumental in driving up prices. Investors, both domestic and international, have been drawn to the city's robust economy and promising future prospects. Despite the recent slowdown, we cannot ignore the fact that Frankfurt's housing market remains in bubble risk territory. Moving on to Zurich, a city that's currently in the bubble risk zone. Here, home prices in the economic region have seen a surge of roughly 20% since the pandemic began, slightly outpacing the national average. This uptick is largely driven by a demand-fueled shortage of housing in urban areas, a phenomenon that's intensified with the strength of the economy. As a result, vacancy rates are at a record low, a clear indicator of the imbalance in the housing market. As if that isn't enough, asking rents have seen a relatively high increase of 7% since early 2020. However, even with this rise, rents are struggling to keep up with the owner-occupied segment. This disparity is another sign of the imbalance in Zurich's housing market. Despite these increases, rents have not kept pace with the owner-occupied segment, adding to Zurich's housing market imbalance. Finally, let's look at two of the world's most famous cities, London and New York. Starting with London, the city's housing market has shaken off a period of stagnation with a third consecutive year of price growth. Can you believe it? It's as if London's real estate market has found a second wind, with nominal prices recording a 6% gain. That's a slight edge over its long-term average of 5%. Now, what's driving this resurgence, you ask? Well, prime property prices are on the rise as international demand increases. It seems that when the search for safe haven assets becomes a priority, London's property market becomes quite the hot ticket. But let's not forget about New York, the city that never sleeps but still finds time to grow. The Big Apple's for sale market saw a price growth of nearly 10% in nominal terms. Now, that might sound impressive, but hold your horses. This growth merely matches the inflation rate and still lags behind other US metropolitan centers. Even in the heart of the city, in Manhattan, and within the luxury segment, the growth rate was even lower. So, what does this mean for New York's housing market? Well, it's in slightly overvalued territory, but given its status as one of the world's leading cities, this doesn't come as a surprise. New York, like London, is a city where demand for property often outstrips supply, driving prices up. In conclusion, both London and New York are sailing through choppy waters in the global housing market. They're dealing with a delicate balancing act between price growth, inflation, and demand. It's a fascinating tug-of-war, isn't it? And as these cities continue to adapt and evolve, we'll keep an eye on how their housing markets fare. Despite their fame and appeal, both London and New York are navigating tricky waters in the global housing market.